you've got a great panel here. Karen Page, Sam Englebardt, Sophia Amoruso, and Nichole Wischoff, all active investors. And since we have an absurdly small amount of time and an incredibly large panel, I'm just going to ask you the most difficult questions. You're not going to introduce yourself. We're just going to get right into it. Karen, maybe you could talk about the size of your fund and the number of deals you've done each of the last 3 years.
Absolutely. Okay, so B Capital is a global multi-stage fund. So we start at seed and we go all the way through exit. I sit on the early stage team, which is called the Ascent Fund. It's a $250 million fund. It's about 3 years old, and we've seen deal volume, continue to trend down over the past 3 years, primarily due to the need to triage and take care of our existing accounts or companies, as well as just the changing environment that's led to us being, I think, just a little bit more cautious and careful in what we're looking at.
So those three numbers, last 3 years.
8, 4, 2.
And so this is attributable to you have a lot of triage, I think, to do, like all of us, and we'll talk about that in our existing portfolios. And then also, I assume, maybe raising the bar on new investments. Would it be those 2 things?
Yep, 100%.
And so, Nichole, how about you?
Yeah, so I'm Nichole Wischoff, Wischoff Ventures, can't do intros, no time. 30 million in AUM, pre-seed and seed focused. Luckily started deploying at the end of 21, so don't have as much triaging as we were entering super early, which is super fortunate. But have learned a lot and also have a much higher bar, largely B2B software and focused in North America.
If you were to look at the last 3 years, 21, 22, 23, how many deals did you do a year and the average check size?
Yeah, on average, so we did 14 between, I guess, end of 21 and 22, and then last year we did 8. So just trying to be,
About a dozen a year, one a month,
yes,
something
yes.
in that range.
Yes.
And the average check size?
$650,000.
650.
But in this market, we can certainly lead a pre-seed round with that, like 6 to 8 posts and get meaningful ownership, so between 5 and 7%.
Sam, maybe same question for you, just to level set with the audience. Last 3 years, number of investments per year, average check size, and
Yeah, so I would say about 20 to 25 investments a year. Average check size in the $3 to $5 million range. And we were doing about 80% across, we're now investing our third fund, about 80% Series Seed and Series A. So we also had 2 or 3 larger, higher conviction, later stage investments per year. Last year, we made 5 new investments. So way down in the.
And Sophia, you're doing your first fund. Everybody knows Nasty Gal, Girl Boss, all the media stuff and businesses you ran before. But you're an operator, and now on your first fund. What do you anticipate in terms of pace? Mm-hmm. And I think maybe a way to ask the question is, how many meetings are you doing per deal that you wind up doing?
Yeah, I've got an Airtable form that's pretty intense. So, the deal flow is awesome. It's amazing to meet with different founders, and I'm really selective with who I meet with. I think a lot of people use the number of deals that they get inbound or whatever as a proxy for the quality of deal flow, and I don't think it necessarily means anything. I like working with second-time founders. As a 2-time plus founder, I applied to my second business so much that it was too late to apply by the time I learned it at Nasty Gal, which eventually I had a few hundred employees. And so, someone who's either been in an early stage company as an operator and especially been a founder before is someone that I'm, most comfortable with. But I wrote 10 checks this year. I'll probably write another 10 this year, and Fund 2 will be closer to probably 40. I'm going to take like a more distributed approach.
Yeah, and the average check size, you're on your first fund, and it's
fund
in
one
the micro
is
fund
around,
category.
Yeah, fund runs around 250K.
Got it.
So pre-seed and seed, and fund 2 will be 250 to 500.
Got it.
Yeah.
Let's talk about the market today in terms of who's the quality of deals. So Karen, we were talking about this backstage. Qualitatively, how are the founders who are pitching you now different, if in any way at all, to the ZERP era founders that you were meeting with?
Yeah, And just to clarify, I was talking about me personally, not the
entire fund,
in terms
correct,
of the deals. So we've been doing about 10 deals a year, about $2 million average check size. But yeah, to your question, it's fascinating. It reminds me a lot of when the cloud evolution was starting, and it was so much less expensive for people to start businesses, and that made the barrier to entry to start a company so much lower. And I think we're starting to see that again with the advent of AI and the continued availability and lower prices of the core technologies needed to run a business. I think that opens up a lot of doors. We're seeing a ton of that. So I think the quality of the deals that we're seeing, there was a phase when we saw some lower quality stuff. I think that was a result of the depression in the overall venture market, where check sizes were smaller and people weren't writing, and the valuations were coming back down. And we saw some deals there that I think were not able to be funded elsewhere, and so people were shopping deals. What we're starting to see now is a very large change back to high quality founders, high quality ideas, and I think very thoughtful approaches to their go-to-market efforts as a result of the past couple of years that we've been through.
Nichole, how many days, weeks, months does it take for your average founder, one you've invested in or one that you are investing in, to close their round of funding at the seed stage where you invest?
Yeah, look, I'm still seeing, and we saw this in 21, 22, I think for the best teams, there's a really good, let's say, 10 business day cycle between once they start taking first meetings and then partner meeting the following Monday and then terms. One of my pre-seed companies that I led is going through this now with their seed round. What's actually easier in this market is you'll see things shake out pretty quickly. So if you're looking for a signal, or if you can't lead it and you're someone like me who might be following a larger round, it's pretty obvious if the deal will get done or not, which is really refreshing, because before everyone would just take a chance and throw $2 to $4 million at any company. And so it was harder to cut between the noise and be like, can they pull this off? Do they have the traits to figure this out?
Yeah, Sam, for the larger size deals, Series A, that you participate in, what's the qualitative nature of the founders today versus, say, 3 or 4 years ago? And you're involved in crypto, so that's an important aside. Yeah, that's a whole other disaster. Actually, let's start with that disaster.
Yeah.
You spent a lot of time in crypto.
I've spent a lot of time in crypto in my life.
Yeah.
I've spent less time in crypto in my current venture.
What went wrong in crypto? Because you've been through many cycles.
Yeah.
And you've been at this for a while. You're the oldest person on the panel by far.
Yeah.
It's a joke. We're friends. We go back a lot. But he is very old. He looks great, but he's in fact very old. But in all seriousness, you were super enthusiastic about this, like a lot of intelligent people were. And let's be honest, it's a disaster.
I don't know that that's the case.
Okay.
Is crypto a disaster, or was crypto, or are there aspects of crypto that were a disaster? And again, my focus over the last 6-7 years has been, at least in my early stage venture life, has been much more in the gaming industry and other things from crypto, although overlapping with crypto some. I think what went wrong, and I'm not saying anything that most people don't know, we had 2 big things happen. We had a preponderance of scammy, shitty deals that were really the result of something we'd never seen before in venture. We had this opportunity for investors to really break the fourth wall, for lack of a better word, and go straight to retail and go to people that were not professional investors and were not equipped to assess risk in the way that you're supposed to be as a professional. And I think you had that combined with, as we all know, new technology trends and adoption take longer than most people recognize they're going to take. And certainly crypto it has had multiple false starts. And so I think you had this double whammy of several years after just the latest boom run in bull run in crypto, you still have a technology looking for a use case in a lot of ways. And so that combination made it very difficult. And again, in a world now where the global news cycle is instant and everything is apparent, and nowhere more than in crypto where everything's also verifiable and on chain, it's like we just had both the opportunity for the mania to get very, very profound. And
is the lesson in all of this that the protective provisions, the architecture we have in venture that's been established since the 1970s, That's pretty good work and good architecture and good bones for our industry in terms of protecting LPs, GPs, even founders themselves from getting into hot water, and that when you bring anonymous retail and you start passing bags without knowing who people are, that's a really big mistake in many ways.
Yeah. I mean, we are in a moment in time, though, whether it's investing we're talking or news and information, politics, the videos and images you see on your phone, on your screens, every day in your life, like we are more than ever facing a tremendous challenge to understand what's real and what people should do and how we should act. And so, one bright side of all of this is at a moment where we have to get people to pay a lot of attention very quickly to second guessing some of what they're seeing and hearing. It's not the worst thing to have had them exposed to some scams and some other frauds. Yeah. It's a little bit like,
that's
how do we get
positive
everybody
thing.
in general aware of like the Nigerian prince that you're supposed to rescue is a real thing.
Yeah.
And
so, Sophia, you and I have both done 506c raises. Both of us have media channels, so that's an advantage we have as investors, both in deal flow and also in meeting new LPs, and we chose to do 506c. Maybe you could explain to the audience what choosing 506c means practically as a GP, and why you chose to do it and how it went.
Yeah.
Or how it's going, I should say, because
totally.
I think your fund is still open.
Yeah, I raised
Selectively.
the initial 5, and Fund 2 will be happening later this year. Everything I've done, whether I like it or not, has been in public.
Yes.
And I'm really lucky that the runoff of having done big things is that I built an audience. My goal was never to really build an audience, but it's something that is amazing to be able to exploit on behalf of my portfolio companies, and something that's been beneficial to getting LPs. Actually, when I announced in TechCrunch in January of last year that I was starting a fund, it's called Trust Fund, by the way, which is, I hope, funny to you. It's funny to you.
It's the greatest
as
fund
it
ever.
is for
It took me
me.
about 90 seconds. I was like,
didn't-
Trust Fund, what a great name. You're building, Trust Fund.
Yeah, when someone's like not for you, when they're like, tell me about trust. And it's like, no, fund is not descriptive. Like, it's trust fund. It's not trust venture. It's like, it's not descriptive, but it is. And so I actually opened it up so that people could apply.
You had a form.
Yeah. So I had like $6 million in applications and like over 1,000 applications from accredited investors and QPs. And they haven't been like as annoying like at all, because you'd think that if you have a bunch of LPs who aren't traditional LPs that they would have no idea what they're doing. But I was able to kind of pick through them and select people that would be really beneficial to portfolio companies strategically, and also people who also have a platform that can amplify the products that I'm building.
And so if you pull the thread on this, you could raise your next fund and potentially the fund after that without having the classic LP class involved. You could just go full retail.
Yeah, I think what got me here won't get me there. Like, it's great to have individuals on my cap table and a lot of awesome LPs like you.
Thank you for
But I don't
slug.
have the institutional investors to the extent that, with Fund 1, it would make it easy to just go raise Fund 2.
Yeah.
Right? And a lot of people are a lot more strategic about the money they take in their first fund. I don't know if I'm going to raise in public for Fund 2, honestly.
I think,
Yeah.
just to give you a little turn around the corner, we did 506c for the first time with Launch Fund 4, $110 million in interest from the public, and we blew past the $10 million limit for accrediteds. Mm-hmm. And then we, I think, have 1,200 now QPs out of the 11,000 LPs in our database. And I think there's a possibility that Launch Fund will never have to raise from classic LPs. We may, but we may never have to do that.
It's almost like a weird syndicate kind of.
I think more like this conference, ALTS, is a testament to the public has an interest in having access, and so there'll be a democratization, I think, of venture capital. The founder of your firm, Karen, is Eduardo Saverin. How do you pronounce his last name? Is that right?
Eduardo Saverin.
Saverin, yeah. Co-founder of Facebook, famously. I think he's based in Singapore now.
Based in Singapore.
Yeah. I mean, that's a crazy story in and of itself. He gave up his citizenship and went to Singapore.
For love.
For love. Yeah. So is your fund, how much of your fund historically is his money? Because I know he did very well for himself. I think the Facebook thing worked out. How much of it is
Still
his?
working out.
It still seems to be working out. Yeah, hopefully he kept some of the shares that he got. And then how much is outside LPs? And yeah.
We were founded on the basic premise that growth stage companies need to have a lot of help and assistance as they're nurtured through their exit. And so very, very early days, we partnered with BCG. They've been partners with us for about 9 years now. They provide strategic counsel and advisory as well as due diligence help for us as we're researching various companies to invest in. So that happened immediately. So yes, Eduardo is a huge LP. BCG is a meaningful LP, and then we have a very traditional base of LPs, including pension funds, endowments, and family offices.
Got it. Nichole, maybe you could talk a little bit about I think, in your second fund now, and your thoughts on potentially ever raising with this new public designation, and how you got that first fund done. It's really hard to start a fund, and so yeah.
I think timing was definitely, a tailwind raising that in 21. I come from the operating side and helped build 3 very large startups and have had great exits, and so I had raised $350 million from VCs on the other side of the table. And so for the $5 million fund, I raised it in 3 weeks, and it was from 30 LPs, largely family offices and VC fund to fund. So the Thrive Capitals of the world that all had $250K to $500. So I will say I had a very different idea of what fundraising for a VC fund was, going from 5 to 20. But then—
How is it different?
5 was super easy at the end of 21. It could have been the size, but there was, there's no portfolio construction with $5 million. There weren't a lot of hard questions, and I raised it off of an email. And so I thought, shoot, this is pretty easy to raise money. And then went out to raise 20 in a very different market in the middle of 2022, and that took about 7 months. Still around 30 LPs, and all from warm introductions. So I think that has yet to end. Perhaps by Fund 3, I will consider a different option, but so far, I feel very fortunate that this is sort of scaled with a small group of people, though certainly not easy.
Well, I mean, I think we can talk about it here candidly. A lot of VC firms are zombie firms right now. I think we all know them. And a lot of people have given up even trying to raise this year. It's pretty dark out there for a lot of GPs. Yes, Sam? You're hearing this as well?
Yeah, I mean, we raised our first 2 funds with 325 each. Our third fund, we have a final close in March. It's going to be about half that size. And it was way harder to raise. We went out to raise the same. We went
10 times the lift to raise half as much?
Yeah, I mean, more than that. We raised our second fund almost entirely on Zoom in 6 weeks, 8 weeks.
1 or 2 meetings, done.
Yeah, and in this cycle, we've found even re-ups are several meetings with people we know. Some of that is, by the way, we raised like a lot of VCs. We stacked funds pretty quickly, and it was fast into big markets, and you got to earn it and show that we've invested well. And then also, I think there's just the general issue that I think it's getting a little better now, but the denominator effect and the idea that a lot of, especially our institutions or other investors that had a bunch of managers they backed, they want to be able to if they're new investors, they know they need to be able to support the managers they've already invested in. Their allocations and their own portfolio construction across publics and privates were really out of whack. I think this cycle ultimately, the industry can absolutely use a bit of a shakeout, and I think we'll be way stronger on the other side of it. Most of my conversations, certainly with existing investors or investors that were in our second fund and have been deliberating about whether to come into the third fund, has been, on the one hand, I get it, and you are where you are. On the other, I'd hate for you to miss this too, because I do believe we're going to hit a point where vintages now and over the next year are going to be far better than 2021, 22 vintage.
It's the great
better be, or right?
I see a lot of nodding, Karen. This is the great paradox, I think, of this moment in time. If you were an LP in funds that deployed in 2019, 2021, you were probably deploying at high valuations in a manic market with maybe a lower caliber of team or focus, and now we're seeing valuations at half or a third of what they were on average, and teams that maybe have far more talent on them. So your best argument for LPs, I think we'll end on this, we'll go around, just why venture is an amazing asset class? Because I think some people are wondering, is it a great asset class? Yeah.
Of course it's a great asset class. It's cyclical though. And I don't know that we've ever seen a period, even in the the dot-com bubble and in the financial crisis, I don't know whether we've seen a cycle like 2020 and 21. So it's relatively new. I think we're bouncing back. I think that we're starting to see deal volume and deal valuations begin to normalize. And I just think this is the best time right now. But think about it, human nature, psychology, people are more risk averse coming out of risky periods, but it's exactly the time to be risk forward and looking at what this next cycle is gonna look like, and I think it's gonna be fantastic.
And the founders that are raising now are serious. Like the GPs that are raising now, they're not tourists. I think when it was super easy to raise a fund, I wasn't doing it, right? And coming in 2023 primarily, half of 22 I was raising, for it to have been super easy, for me to have been able to do that really quickly, I wouldn't have gotten the chops and had to understand things about fund construction and recycling or whatever and questions I wouldn't have had to answer were it to be easier. So I'm glad it wasn't the worst, but it was also not
It wasn't pleasant.
the easiest. And the founders who are building right now, they know it's hard, and they know that there's this small, it's gonna be a slog to fundraise, and the ones who are building are really serious about it. And I think it's gonna kind of separate the founders who are doing it because they can raise money at a 70 million post when they're not even doing $1 million in ARR, versus the ones who are happy to take a healthy valuation and not set themselves up to be in valuation purgatory, which I've experienced, unfortunately.
Yeah, you were there, yeah.
And can help them a lot with.
Yeah. Nichole, I see you nodding as well. I think about 80% of the LPs we spoke to during this fourth fundraise, which I'm just wrapping up, said, we'd love to meet with you, we're fans of your podcast, but just so you know, we're pencils down this year and next year, because we just have to figure out if we have the money to fund the commitments we made with the existing GPs we have. And in fact, don't tell anybody, but we're cutting 20% of our commitments to zero. And then of the remaining 80, we're probably cutting them all in half. So you net that out, they're maybe putting 20 or 30% to work than they were previously. What did you see, and what have you seen in the market?
Yeah, so, and again, it's totally different when you're actually raising versus talking about raising soon. I think you get different feedback. So a lot of what I'm hearing, and even from friends that have just now closed anywhere from $75 to $150 million funds, all of them, and I've caught up with several even in the last few weeks, have said similar things where it's like, Nichole, if you're raising sub 75, it's going to be so much easier for you because we've met so many LPs, even institutionals, endowments, I could name a few along the way, that really just want these exposure to micro funds. So that is a huge priority. There is a bucket for that. I'm also hearing a lot of
Why do they want access? What are you hearing? Why do LPs
better returns?
covet?
Small funds put up great returns. Like we have the opportunity. I mean, you can actually talk about 10xing a fund if it's a $5 million fund. We'll get a little bit bigger than that. But I also fundamentally, personally don't believe if you're doing pre-seed and seed stage investing, why on earth do you have a $100+ million fund? Our job is to make money. So, build the fund size. You can still have a great reserve strategy to absolutely crush it and actually do well. Most funds don't even 3x,
Also,
even if they're
it's in
20.
the best interest of the GP or GPs, because if you raise but 40, 50, 60, the hurdle that you have to get over to start hitting carry is so much lower. And if you did hit a home run, Uber, Calm, Robinhood, some of the ones I was lucky to hit, if you hit one of those, oh my Lord.
Yeah.
Thank you for somebody got the joke.
Yeah. You just need one. Yeah. So
Yeah, but you're in the money so much faster.
Yes. Yeah. So I've heard really great feedback. I think a lot of other folks are also like, hey, we were first checks and folks like Cotu and, the larger funds, and we're done. We're taking a step back, they're not putting up the return profile. I've had an endowment recently say, if these guys stayed at $400 million funds and put up the returns that they used to, we would have stuck with them for life and there'd be no room for new managers. But I guess thankfully for us, they've gotten so big that there's opportunity to raise more capital. But
Sam, I ran into you in Riyadh this year, and just been getting an education on the market over there, but you've been active in the region for a long time. How have things changed in Saudi, UAE, Kuwait, Oman, Qatar, and how serious are they about venture capital in your perspective, having watched them, start placing bets over the last decade?
Yeah, I mean, I think the biggest structural change that I'm seeing is where they're focusing on deploying their capital and how they're thinking about who their managers are. So they went through a long period of time where the whole region, where the strategy was more about identifying the great managers to back that are operating and building businesses and portfolios outside of the region. And I think over the last few years in particular, that strategy has really shifted dramatically to who's building here, who can we back here. The realization, I think, that they, especially at this moment in time, really have something, not just capital actually, but a mandate to build a lot of the stuff that a lot of us investing in venture want to see brought into the world. And so I think people are more willing to come there, people are more willing to do and build things there, and people are recognizing that the demo in that region is starting to get pretty interesting globally and is scalable in a way that was previously questionable. So the biggest change, I think, is just you can still raise money as an outside manager for sure, but the expectation is you're going to be relevant to them somehow in their own initiatives on the ground.
Yeah, and a lot of founders are choosing to locate there.
Yes.
Pretty amazing to see what's happening in Abu Dhabi, Qatar, Doha, Riyadh. If you are a startup, you can get $500,000 in funding, a golden visa for 10 years, and an office space for basically no equity or very little equity, and so they're really trying to court people to build their companies there.
I think the visa thing is maybe the most important. The money matters, but like as everybody here knows, when you're building businesses and it's hard now to aggregate a team of engineers, to find them in any one place and under one passport. And we used to be able to do that. You'd have companies that would just go grab 50 engineers from here or go plan an office somewhere. That is increasingly hard to do, and people are being moved around more like now than ever, including in a lot of the places like Ukraine and other places in Europe where you used to have great aggregated engineering talent pools. So when the UAE plants a flag and just says, you can come from everywhere, you will get a visa, and you want to bring 50 engineers from all over the place, all under different passports.
Oh yeah, and they're going to pay 1% tax.
Well, yeah, and by the way, and they're not going to pay tax, unless you're American.
Or not even pay tax.
We all pay tax everywhere.
We still pay taxes. All right, listen, I could talk to you guys for hours, but we had half an hour. Incredible job, Nichole, Sophia, Sam, and Karen. Give it up for our amazing panel, everybody.
Thanks, Jason.